This is Coach Gino with TackleTrading.com with the market recap for the end of the first quarter, March 31st. Tomorrow's April Fool's Day, so be ready to start earnings season. That'll be the fourth month. We're ending today. This is the end of the first quarter. So let's take a look at what's going on. How do we end the last day of March? First off, I want to note it's been really low volume. This is unusual for the end of the quarter because there's usually a lot of window dressing and a lot of mutual funds moving money around at the last few days of the quarter. But why is it low volume? Why isn't it higher? Because I think the markets are waiting for the unemployment report tomorrow. That's the jobs claim tomorrow. This is definitely usual, a low volume right before that. Either way, the S&P is definitely bullish. It would have to be a very big move for us to go bearish, and quite a few days before we go bearish. A lot of resistance up here at 2080, a lot of support down here at 1993. Draw your attention down here to the on-balance volume. Since we have low volume this whole past week here, we're not making higher highs on the volume. We should be when the market's hitting new highs, and that's going to be normal when we run into resistance here. So basically the S&P bullish. I'm not going to go through all the markets because you can look through below this video here on our market recap. I put charts on all the different markets. Just click the thumbnails open. But I do want to take your attention to the VIX. Very low volatility. Getting down here close to the many month lows again. Down here in the teens, the low teens. I've seen it hit 10.8. I think it was the lowest in the last year or so. But this is pretty darn low. So options are cheap. It's hard to find credit spreads out there. If you look at the market recap, I always put down there under trader thoughts what strategies I like right now. If you're looking for theta and making money on time, covered calls and diagonal calendars have been doing real well. As far as debit trades, long calls, of course, because all the sectors are bullish except one. There's an industry called pharmaceuticals. All the sectors are bullish right now, and I'm going to highlight a couple things that aren't. But right now, look at pharmaceuticals starting to give me a swing high. What's a swing high? It's a 3-candle pattern right there. You see it? The white candle hits its head on the 20 and triggers back down. Usually a setup like this that's already in a bearish trend will continue to go down, usually. That's my prediction there. So there might be a lot of stocks setting up in the pharmaceuticals. And looking at my RSI, it has been bearish for some time. And the on-balance volume has been very bearish for some time. Don't know why the pharmaceuticals are going against the overall trend, but they are. So if you have to find a bearish play, there you go. The dollar, very bearish. We're on a 5-month low here. We're bouncing off a 5-month low. This all is due to, first off, it's already in a downtrend. There's my indicators. What a great system. RSI below 50, and that's the 21 RSI, and the OBV below the 20-day moving average. Now, just so you know, I like stockcharts.com because it's the only place I could get this indicator, the moving average and the on-balance volume in the same place. I've been using this system for now about 17 years, and it hasn't been beaten yet, so I really like it. So what happened is we've been bearish since this whole time right here. See how they lined up? And waiting for a swing high, we got it right here. And thanks to Janet Yellen and not raising interest rates, we have a big down candle right here. So we're coming up on support. If this breaks, by the way, there's a lot more room for the downside on the dollar. Why? Because they're probably not going to raise interest rates this year. Now, if you've been following my reports and the coaches show, I've been talking about them not only not raising interest rates, but I think they're going to start mentioning quantitative easing. That's a possibility. Then you'll really see the dollar crash. Watching the rest of the world, the only reason we're doing really good is because the rest of the world is. By the way, I've been looking at fundamentals of stocks, and they don't look great, so I'm not expecting a good earnings season starting next month. I don't think earnings are going to be really awesome. I think they're going to be kind of subpar, and outlooks aren't going to be great because sales have been lower. There's the rest of the world. Look at that. Looks just like the S&P. Oil. Bring your attention to oil. Still bullish trend. We haven't confirmed, but I'm going to put it as neutral to slightly bullish. What I want you guys to notice here is 3 times its close below the 20-day moving average. Usually about the third time, you'll get the crossover from the 10, and that means bearish trend. But you know what? We need one more day, probably a fourth one, and then you'll get the crossover here. And once again, look at your RSI below 50, OBV. This is signaling to be careful. This could break down. The only thing holding it up is right here. You can see the support on about 959. So about 960, a break below that, and it might sell off again. We'll see. The dollar has a lot of play on that too. Finally, gold. Gold has been very bullish. We had a great diagonal calendar on this. We played this many, many times in the option report, made a lot of money on gold. But there's your lower highs. I'm going to put it at neutral, but if you count this as a lower low, it could be starting a bearish trend. My trigger would be just below 117, or actually 116 and a half. And if it breaks 116, yes, it's definitely bearish. I'm putting this as neutral, keeping my eye on it. Why? Because the RSI is not below 50 yet, and the OBV is below its moving average. There you guys have it. That is another awesome market recap by Coach G. Have a great trading day, and stay tuned for more with tackletrading.com.